Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw another day of gains with the Nasdaq leading and small caps also looking strong today, Ken.
Yeah, and a close near highs. I mean, we just can't stop these buyers from coming in late and lifting indexes higher. Really bullish close again today. Semiconductor stocks continue to be a big pocket of leadership in the Nasdaq. So I want to start by taking a look at the VanEck Semiconductor ETF SMH, which held up pretty well today, considering. We'll get into that in a little moment. But also take a look at Microchip Technology MCHP, and we'll go three in a row in the chip sector by taking a look at Globalfoundries, GFS.
Yeah, we're going to dip into the chips today.
Let's dip into the chips.
Yeah. So more analysis coming on that shortly, but first let's take a look at the major indexes. Today, the Nasdaq up 0.9%, but outpacing that gain was the Russell 2000 with a gain of more than 1% for small caps today. For blue chips, the Dow up 0.1%, and the S&P 500 up about 0.3% here. But as you said, buyers keep coming in. We now have 2 days in a row of upside reversals, and the Nasdaq is now back above that 12,000 level.
Yeah, just barely above 12,000. It's been rallying in light volume over the past 3 sessions, but that really does not diminish the fact that we've seen a lot of volume behind the Nasdaq during its latest move off lows. So I think the technical picture of the market, as we talked about on IBD Live, continues to look strong. I mean, the Nasdaq, after 3 straight gains, it could come down to that green line there, the 21-day exponential moving average, and it would still look like a normal pullback here. So, we could see the Nasdaq just kind of consolidate for a little time here, right around this 12,000 level. But market technicals continue to look good, and the action in individual stocks looks as good, if not better.
Yeah, exactly. And now let's take a look at the S&P 500, up a smidge here today, but also on the verge of clearing a trend line. If we go on over to QQQ, which tracks the Nasdaq 100, we did see it edge above that level today, along with the composite. And now we can take a look at the Dow as well. Still lagging, Ken, but not broken yet, just not really going anywhere.
Just not really making progress with the Nasdaq. You can see the relative strength line for the Dow has really been trending lower for quite some time. Even when it pulled down to that 32,500 level and started to rally back, and then then the relative strength line really started to lag. So really, the strength in the market right now is in tech stocks and the Nasdaq, and doesn't mean that there aren't some blue chip stocks out there that are working,
right?
But I think the Nasdaq is the leading leading index at this point.
Right. Which, hey, it's good for stock pickers market, right? If we can find those individual winners that are going to outperform.
Yep.
All right. And now let's take a look at IWM, which tracks the Russell 2000 with a strong gain here today. So arguably this too, breaking out over a trend line after an upside reversal at the 21-day line. And that also coincided pretty close to those highs from late last year.
Yeah, I mean, this for the IWM, this was a classic retest of a prior buy area. You mentioned the pullback. It came right down to that 21-day exponential moving average and found support. So again, another example of an index that is showing good technical action here. And we're in a confirmed uptrend. The market tide is flowing positive, and this is the time to be putting money to work in stocks.
Yeah, Ken, it's music to my ears to hear this, because for a whole year we were saying the opposite, to be careful, maybe test positions here and there, but the bear market was really brutal, and even longer than a year for a lot of growth investors, with many growth stocks topping in February 2021. So it's been a long time since we've had market conditions that warrant saying, "Hey, increase exposure." And times are looking good.
Yeah. I mean, we had the follow through day on January 6th, which was our first sort of signal to start to wade back into the market. But we saw several follow-through days last year that just kind of were false starts and never really got going. And that's we know that follow-through days don't work all the time, but we always want to pay attention to when
Mhm.
one happens. But this one definitely had a different feel to it. There's still uncertainty out there with the Fed and how high interest rates are going to go, and
Right.
how long they're going to stay elevated to fight inflation. But just paying attention to the market itself, the action has gotten a whole lot better for sure.
Mhm. So now we'll keep an eye on the recent highs here from early February, also going back to August. I'd be curious to see that for the Nasdaq as well. It has a little bit more room between the February highs and the August highs, but just a couple of levels on the upside that we're keeping an eye on, in addition to that pullback area that you noted, Ken. And now let's take a look at the 10-year Treasury yield, 0 TNX, up for today. So that also potentially underscores the strength that we're seeing in stocks. If we're seeing the rising 10-year yield here, but that's not putting a damper on this rally.
Yeah, I mean it's pretty amazing. I mean, normally rising bond yields is not friendly to tech stocks and to the Nasdaq, but the market is just shrugging off bad news in the form of rising interest rates here. It's interesting when we saw the Fed's last dot plot, their terminal rate was around 5.1%, and that's likely going to increase now to maybe up to 5.25%, maybe even a little higher than that. So not surprising to see interest rates heading higher here. You also have this, red hot jobs situation where unemployment is at a multi-decade low. We had retail sales earlier today that just
Mhm.
blew the socks off the estimate. Very, very strong retail sales. And the Fed doesn't necessarily like to see this, because when you've got booming retail sales and a booming jobs market, that's is not going to help in the inflation fight. But just to see the market acting the way it's acting, maybe it knows that interest rates could start heading lower before the end of the year, or at least they feel good about a soft
Right.
landing for the economy here.
Yeah, and even though conditions look pretty sunny right now, we still need to take things day by day. So you got to keep that in mind as well. And now let's take a look at XLY. Following up on that from a look earlier this week, it's continuing to show strong gains here with a day of outperformance up almost 1.2%.
Yeah, consumer discretionary ETF. It makes sense to see this one doing well amid more optimism about the health of the U.S. economy. But this one is, recently found support right where it should, at the 200-day moving average. It was a powerful move above the line when it ran up close to 160, came down, and is finding support here. So this one, for ETF investors, not looking bad at all here.
And speaking of, got to give a little plug because Ken, you and I are going to be chatting in detail about ETFs coming up on Friday on Barron's Live. That's happening at noon Eastern on Friday, barrons.com/live for all the details. But we're going to go over all the ways that traders can benefit from analyzing ETFs and adding them to their portfolios when the time makes sense.
Yeah, yeah, and I've said on recent shows, we've had we probably have more ETFs in the leaderboard model portfolio than we've had in quite some time. We've got plenty of good growth stocks on there too that are outperforming. But yeah, these ETFs are just a great way to stay kind of in tune with sector strength and sector rotation. So look forward to that
Yeah.
on Friday.
Yes. Once again, barrons.com/live to sign up for that, to learn how you can supercharge your portfolio with ETFs. All right, moving on. Let's take a look at another ETF, and that is SMH, which tracks the chip sector. So, seeing it getting close to recent highs after a strong move. So, this is an interesting looking setup here. We've seen a lot of chip stocks really kick it into high gear in 2023.
Yeah, no doubt. And I think what's impressive with this one is the top holding of SMH is Taiwan Semiconductor Manufacturing. And then late yesterday, there was a 13F filing by Warren Buffett saying that he had sold some 85% of his position in TSM. So you can see TSM did not have a very good day, down more than 5%. 5%. And being that the top holding of this fund, you can see the SMH really didn't move at all. So that just shows you the broad-based strength of the semiconductor sector. This ETF had a reason to sell off today because TSM being the top holding, but just because of strength in other semiconductor stocks and continuing to show good price performance, this ETF still looks very solid here. This one joined leaderboard on January 23rd when it initially moved over that 234 high. So it's been a good short-term winner for us, and we're open to increasing the position, especially if it can move with conviction above this 250 level.
That's right. And now let's take a look at MCHP. This is Microchip Tech in the semi-manufacturing group with a recent breakout right after earnings. And it's been able to hold its gains. It's slightly out of this buy zone as identified by pattern recognition, Ken. But could it be working on a follow-on entry for those who did buy this breakout?
Yeah, that's the way I'm looking at it. There was very, very strong volume at the breakout. The recent decline has been in light volume down to the 10-day moving average. But I think the weekly chart gives us a good perspective here why this could be approaching an alternate entry here, because you can just kind of look at the this big, huge cup with handle base. So to me, this stock still looks like it's in the early stages of a possible upside move here. So a good one for the watch list. I think it still has a chance to to break out of this big cup with handle base. So even though the daily chart showed an earlier breakout, still a chance that this one could move above that recent high and fully break out of this long consolidation.
Yeah, so a handle there. I'll go ahead and set the alert. Got a nice RS line blue dot underscoring the stock's outperformance versus the S&P 500 as of late. And a great reminder of why we should be looking at charts with different time frames before we're looking to buy, because they can tell us a
slightly different pictures. Absolutely. Yeah, and this is a good example of that.
And GFS Globalfoundries also on our radar right now. It's up over 8% so far this week. Some strong volume. It broke out on earnings in Tuesday's session. Down today by about 2.5%, but still closed off lows near session highs. So it's still right in that breakout area, Ken.
Yeah, I looked at today's 2.5% decline in above average volume as really not that bad. I mean, really a good example of how a down day in heavy volume actually looks pretty good, because there were buyers that came in and lifted this stock off lows, and it actually closed still in that 5% buy zone. So really nice breakout yesterday. Sellers hit the stock early, but the market is strong, so not surprising to see this one rally back. Still looks actionable here.
All right. Well, thanks, Ken, for that look at those chip-related tickers there. And thanks to everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details on our daily morning live stream, starting 10 minutes before the opening bell and running through the first hour and a half of the trading day. We'll see you there, and we'll see you right back here tomorrow at the close.